Hello everyone, it's Carlo from CMC Markets. In this video, we'll take a look at some of the most actively traded products at CMC Markets amongst our client base, and we'll take a look at technicals and fundamentals to assess the current trend and whether these trends will continue or not going forward. So over the past few weeks, equity indices globally have been some of the most active products traded amongst our clients here at CMC Markets. The first one I'd like to analyze for you is the ASX 200. Now, last week we saw record highs for the ASX 200 above 7,600, and for two main reasons. One, all the US major equity indices had strong gains, achieved record highs, and in Australia we saw weaker economic data, weaker employment growth, and a slowing of inflation. That were the two main reasons. Focus shifts to Tuesday's RBA meeting for a possible dovish pivot given recent economic weakness. Keep an eye on the wording of the RBA statement as to clues going forward for perhaps timing of rate cuts in Australia. The trend is up, 20 EMA above the 50 EMAs you can see on the charts, and diverging since they crossed over on the 1st of December. Very nice pullback in the ASX 200 around about the 20th of January, bounced strongly off 7,325, which was a swing low point. And for trend followers, your supports are the 7,550, 20 EMA, and the 7,420, 50 EMA going forward. So you can see here the next chart, the Dow Jones recorded its fourth straight week of gains last week after a sharp fall to start the year off. New record highs in the Dow. Why is that the case? Well, you've got a Goldilocks type economy where inflation is falling in the United States quite rapidly, 3.4%, where it is right now, and you have growth. And that's quite a good recipe for investors in terms of confidence investing in shares. So with that fundamental backdrop, the technical picture is very, very similar, supports that as well. So if we can see a strong uptrend intact here, 20 EMA by 50 EMA and diverging. I've placed the EMAs there as potential support levels for you for those who are long the Dow, 38,000, 20 EMA. And you can see how the 20 EMA has held well since October last year. There have been a couple of retracements, but it's bounced strongly off that 20 EMA. So keep that in mind going forward. Next is a NASDAQ. The macro picture is very similar to the Dow, and prices here on the charts have bounced off that 20 EMA again last week to roar and make new record highs. Now, as I said, trend, quite a strong uptrend there, 20 above 50, but focus on the 20 EMA because that has proved decent support over the last few weeks and has been quite an excellent entry level for fresh longs. So the question now is, will these trends in US equity markets continue? And that's going to determine and depend on economic data going forward. So we know that data has been stronger than expected, and we've seen a pushback by the Federal Reserve on rate cuts and by the market now believing the Fed that rate cuts might be delayed until the second half of this year. However, if we do see economic data weakness over the coming months, then that'll bring forward the timing once again of rate cuts. So these are the kind of things to keep in mind when trading the indices. Let's now take a look at some of the individual stocks traded in the NASDAQ that have had huge moves in 2024. You couldn't have two more polar opposites in Meta and Tesla. First of all, Meta, its recent earnings report was well received by the market, in particular the $50 billion share buyback and its first ever quarterly dividend of 50 US cents a share. The technicals for Meta look positive, as you can see here on the chart, and including that 20% jump last Friday. Going forward, if you're trading on Meta on the daily chart, keep an eye out on the 20 EMA, which acts as decent support at $389 a share, and the 50 EMA at around $364 a share. And finally, Tesla shares, which are down 24% so far in 2024. Tesla faced a challenging fourth quarter as it missed earnings expectations and warned of potentially slower growth in 2024. That wasn't received favorably by markets, hence the big drop. Now, the technical picture in Tesla is down, as you can see. Clear downtrend when the EMAs crossed over in the second trading week of January, and then the downside accelerated, despite the NASDAQ pushing higher in 2024. As I mentioned, first of all, the market did not receive well its quarterly numbers. And from here, any bounces are likely to be capped at the 20 EMA of $206.40 US a share, and then $222 US dollars a share, the 50 EMA. And again, the question you need to ask yourself is economic data from here on. If it does weaken, then perhaps rate cuts might be brought forward. So there you have it. That concludes my session for today. Thank you for watching, and I'll see you in the next video.